There is a greater than zero possibility that you're going to wake up as soon as this ETF launches and there is a $20,000 first day candle. Now, do I think that that is probable? Probably not, because I think it's going to take some education, some time for that capital to ramp up. I don't know if on day one there's going to be an extra $40 million of purchasing going on. But the very fact that it's even possible, because that's not possible with real estate, it's not possible with stocks, it's not possible with bonds, it's not possible with gold. But with Bitcoin, it's possible because I know where every Bitcoin is, I know who's got the Bitcoin, I know who can sell, I know everything. It's a one asset, right? It is the same asset. Real estate is an asset class which has many different types of assets in it. Just because single family homes are going up doesn't mean beachfront is going up. Just because beachfront is going up or down doesn't mean single family homes are going up or down. These have different demand and supply dynamics. With Bitcoin, whether you're an ETF, an individual retail person, someone mining it, someone on the other side of the world that doesn't even have access to capital markets, buying it P2P, you're buying the same asset and it's got the same scarcity and you're impacting the scarcity of the asset on day one. When an asset goes through a securitization process like Bitcoin is going through right now with the ETF, how it works is like this. There are going to be funds out there whose job it is to manage your money. So say you work for someone, right, and they pay into your 401k. The company that pays into your 401k has an account, sub-account in your name. They send that money straight to the manager of that 401k, and the manager automatically makes those required allocations. And with Bitcoin becoming an ETF, a securitized product, now all of these asset managers that are managing retirement funds, that are managing all of these assets, are going to have the ability to just drip feed into Bitcoin on a daily basis because it's the rules of their allocation that they're dealing with. And so this process is extremely important. While a lot of people are talking about, oh, this is my amount of money that's going to come into Bitcoin over X amount of years, this is what's going to, these numbers are crazy, blah, blah, blah. The real thing that's terrifying about an ETF is the consistent inflows that can come in and suck up the amount of Bitcoin that's available on the market. Because when you think about it like this, traditional assets, saving up, people that don't really know how the financial system works, think they have time, think that the cycle is going to be the same. It's going to shoot up, then crash, all this other stuff. The paradigm is literally about to shift here. Will there still be ups and downs, blow off tops and crashes and things like that? Sure, but they're going to be a lot more muted because of the inflows that come in an asset that has been securitized. So, understanding what you're actually owning is very, very important, and most people don't want to do it. They rely on advisors like BlackRock, like Fidelity, etc., etc. And those guys are getting to the point where it's like, yeah, this is the best performing fund. It's Bitcoin. I want a 10% allocation to that done. I don't care what Bitcoin is. You're going to take care of it. I have no desire to understand what this is, how it works, etc., etc. So we can sort of calculate what would happen based on my prediction and what that means for the price, and then look at the downstream effects of that. Because remember, once price starts moving up, what we've seen in Bitcoin is that the hodl rate actually goes up. A lot of people have this fear that as the price goes up, people are going to start dumping their Bitcoin. That's stupid retail, right? That's stupid retail. It's traders. It's all of this other stuff. Actually, the real data shows that as the price is booming, the hodl rate is actually climbing because people are understanding, especially institutions. So one of the things that I've said is that the hodl rate for Bitcoin will go up over the next decade, not down, because now the type of buyers that are coming in are terrifying. These buyers want to hold something and they want to hold it forever. They want to hold it past their death, which is why it's going to be structured in a trust that's managed by, certain trustees, and they're going to have mandates as to what to do with the assets, etc., etc. And so, if we're looking at this ETF product, and based on the numbers that I said, you're looking at $25 billion coming in within the first year. And again, because of the way of the asset works, we can look at the aggregate. Basically, if we take my number of $25 billion coming into the funds, and you evenly spread that over the number of trading days, some days there's going to be X millions of dollars, some days it's going to be X times 2 millions of dollars, some days it's going to be X, times 0.5 millions of dollars. So it's going to go up and down. It's never going to be daily this is going to come in, but this is the only way to really analyze this. So $25 billion divided by 252 trading days means that we get an additional, because it's whatever's happening right now is already happening. ETF is new money. We're going to get an additional $99 million per day of purchasing. $99 million a day of purchasing, which basically tells us that if we're getting $99 million a day of purchasing, and we take that to now being $130 million a day, and we divide that by a top line case of 900 Bitcoin, right? Which is what's coming out on a daily basis. Now, it's not exactly this, because remember, you're going to have the Bitcoin that people sell. You're going to have the miners that you know, start selling their Bitcoin. You're going to have people that come in and that, you know, as the asset changes hands, there's going to be people selling their assets. But if you've got $130 million of purchasing going on and 900 Bitcoin a day coming out, the equilibrium price on that $130 million a day is $515,000 per Bitcoin. That's on day one, because remember, I'm not talking about the full 25 billion here. I'm talking about the daily purchasing demand increase that will happen. So you got $130 million. Now the question here is this: how far can the shorts ramp up against this? Because if you have an extra $99 million, but you have an extra $60 million a day worth of short purchasing, you now have that $39 million of net effect. The net effect, the net long or the net short, is the key number here. That is the unknown. But if we have a pure $130 million per day of purchasing here, we're going to take that price to roughly $500,000 a coin on day one. Now, again, I will reiterate, it's not going to work like that. But the equilibrium price is important to understand, because that's how you start to understand the demand of this asset. Like I said, it doesn't take into account miners selling. It doesn't take into account new shorts coming in. It doesn't take into account, you know, retail coming in and saying, hey, I want to generate some liquidity. Like my parents, right? They might want to sell a piece of their Bitcoin in order to just enjoy life or whatever they want to do, which they're fully in their right to do because they're in retirement at this point. So imagine that this buying happens in the US, and then the Swiss funds or the Asia funds or the Brazil funds, etc., that buying kicks up. I'm talking about total aggregate in the fucking world. I'm not talking about just US markets here, right? This is obviously, we're talking about, with this particular example, we're discussing what happens with the capital inflows into the ETF. What happens if there's another $10 million of purchasing going on worldwide because the marketing media has gone through the roof? Because remember, just because BlackRock's advertising to you doesn't mean you have to buy the ETF. You might get another $10 million a day worth of purchasing worldwide, right? Worldwide, not just in the US, which has decided to buy Bitcoin because they saw a BlackRock advertisement, thought, hey, maybe I should get some of that, and they go to Coinbase, or they go to Binance, or they go to whichever exchange in their own jurisdiction and decide to pump in a bunch of money because BlackRock is advertising Bitcoin in the USA. We're not talking about any of that. We're talking about simply a day one price that could be a candle that would scare the living shit out of you. And most importantly, other than that, while you're sitting there scared, the one thing you'll have realized is, let's say the price goes from $45,000 to $65,000, right? You've almost missed, well, not almost, you have missed out the opportunity to gain that, you know, 0.2 whatever Bitcoin that you could have had, instead of, you know, waiting for it to get approved in the ETF, by just taking the action now and securing your position. So I say, getting to one Bitcoin is extremely important, because the price, it can run away from you. This is not like any other asset. You can't halt trading. If the ETF has so much demand and the US market say, okay, we need to halt trading on this ETF, doesn't stop the trading of Bitcoin. And because it's the same asset worldwide, it impacts the net supply worldwide, right? This is why the SEC, part of the thinking, it has to be, why they were so terrified about launching this and manipulation going on in other markets. But they know they can't control that. This is an asset. This is a global asset at the exact same time. So the ancillary effects are not even calculated in what I'm saying here. I'm talking about a day one price that's going to scare the shit out of you, potentially. Potentially, because it depends on how fast it ramps up. So overall, the demand here is unbelievable. you are sitting, if you're sitting around not got into one Bitcoin, you live in a G20 country in this bear market. You've had the longest bear market since 2008 in order to do that. You are going to miss out and you're going to regret it, and you're never going to be able to get to one Bitcoin. And owning the actual underlying Bitcoin is what's important, not the dollar value of it, which is, again, it's going to be unfortunate, but I think people are not aware of how fast they're going to get priced out of being able to afford one Bitcoin as soon as the ETF starts trading, and it's getting deadly close now. So please take some action. Please take some time to learn about this. Subscribe to the channel, because ultimately there are always only 3 rules to Bitcoin. Step number 1, you buy Bitcoin. Step number 2, shut the fuck up. And step number 3, you get fabulously wealthy.